You're tuned in to Agriculture Today, and we start our Friday show with a grain market outlook. And as always, we're joined by K-State grain economist Dan O'Brien. Dan, thanks for joining us once again.
Thank you, Shelby.
Dan, continuing to kick off our conversation with what is futures looking like?
Well, they're pretty bearish according to the perspectives of most ag producers. I saw May corn close at 426 and the quarter yesterday. That'd be Thursday the 18th. New crop bids for Dees corn had been trading around 470, 475. Now they're at about 460. Uh, for soybeans, yesterday's close for the lead contract in May was about $11.34, down about 50 cents from where they were but a week or two ago. And November new crop beans at basically 1149, 1150 thereabouts for the close. And wheat at 570 for the May contract, 577 and a quarter. May contract 575 and a quarter. There's been information coming out here of late talking about break-even prices for wheat as such, and they they quoted information from K-State. We gave them the information. They quoted the full economic cost numbers, which were closer to six and a half. The actual cash cost coverage numbers, again, before you pay full cost for land, full cost for machinery replacement, what you'd have for full economic cost long term, a dollar and a half lower. So we're covering cash costs even at these levels, but it's for in the long run, are you able to replace machinery? Are you able to buy land? Would be the issues of full economic cost. So challenge as it is, I would say that corn for the May contract has been trading in about a 425, 426 to about 450 range over the last 2 or 3 weeks. Had gotten down to about 410 in February. So we're not at the very most recent low for that contract, but we're into planting season, and as we'll talk about here in a minute, dry conditions, nothing hindering the planters to roll in most of these areas, even forecast over the next week and a half. So very likely we'll get the crop in, but then the issue of concern about lack of subsoil moisture in a good chunk of the Corn Belt, the need for rain to come, etc., will all come into play. But again, myopically speaking, as we stand here today, they're getting the crop planted. We're starting to get the crop planted in these areas, and not a lot of worry at present. I would say for the soybean charts, we had, whereas for corn, we had a time back in February, basically, where we traded down to about 410, and the market at about 426, 427 as on yesterday's close. Here for soybeans, in essence, we closed down to 1134 and a quarter yesterday on the May contract, and that matches almost to the tick, to the quarter of a cent where we had been during that same period of market lows in February. So we're at arguably just a little bit more of a crucial time in the market for soybeans than we have been for corn. But then again, you've got the South American harvest coming on. Still arguments, differences of opinion, size of that crop. Would note in the April 11th WASDE report, the USDA projected the Brazilian soybean crop at the Brazilian corn crop at 124 million metric tons for soybeans. Projected that crop for this year at here in 2024, 155. You still have the CONAB in country projecting about 5 or so million metric tons lower, and projecting also lower for corn. So the USDA in their most recent report basically is pretty confident in their current numbers, unwilling to move any closer to CONAB until that in-country source, until they have more I guess evidence. So we'll see. It's at if you if crop analysts got away from their computer and actually sit down in a coffee shop to talk anymore, if that actually happened, we'd be talking about, well, who's right, the South American numbers or the USDA numbers? And I guess we're going to find out in the next as we keep going on. But right now the market pretty determinedly trading the higher USDA numbers, and we'll see if it proves that the in-country numbers are higher, are correct, rather than and market has moved lower for those supplies, then that would be a support for the for the corn and soybean markets, probably both in coming months, but it's not here yet. I would say also for wheat, we've looked at I've talked about wheat futures trading here yesterday on Thursday, the 18th of April, closed at 577 and a quarter, almost exactly in the middle of the price range we've had from about 550, 552 on the low side to about just a little over 6 on the high side that we've been in basically since January. So we're tortuous in a tortuous manner. We're going sideways, up and down, but still staying within that range. Harvest is coming up. We'll watch now all that much more with wheat, whereas we're wondering about planting conditions for corn and for soybeans and sorghum coming up. We'll be looking at crop development, crop conditions, the threat of freezes still out coming on, dryness emerging in the Western Corn Belt, and we'll see where wheat goes from there. I would say that in terms of factors impacting the corn market, we've had pretty strong exports, really strong exports actually, for the week ending April the 11th, 61 million metric tons basically of U.S. corn being actually shipped, and we need about 48 to meet the USDA's pace. So we've got that a South American crop coming on, but concerns about it are coming into play. Lowering numbers in country out of Argentina also, with too much moisture coming in, and worries about La Nina coming on. So you got that coming in, and grain sorghum shipments. Again, it's on this up and down roller coaster. Moved a little bit lower this week to 3 million metric tons. Need a pace of about 4 to meet the USDA's projections, but really we're as total shipments go relative to the marketing year, we're running a little bit ahead. So still sorghum looking pretty good. Hard red winter wheat, what we grow here, and we've been bemoaning exports for so long, Shelby, that when we have a good week, it's pretty easy to overlook it. But during the week ending April the 11th, we had about 4.8 million bushels of hard red winter wheat shipped. We need a pace of just under 4 to meet the USDA's projection. So here, after beating that market down lower and with poorer exports for months and months and months, it seems, now if we get prices at these low levels, I guess we're at we've dropped to a place where we're more affordable in the world market. And even hard red spring wheat had a pretty good week last week. Basically 5.5 million bushels, need about 4.4 to meet the USDA's projection. So surprising. I guess when you hang out at low levels like this, eventually the market has to come and find value for the price, and they're starting to find it now, even at these low price levels for wheat. So that's a positive thing.
And Dan, you mentioned that WASDE report, which we talked about with you and Guy last week. And really, what impacts have you seen on the market for this week as it's digested?
Still not any hint of positivity. Really, that market, I mean, that market report from the USDA, in hindsight, hasn't changed a lot. I don't think. I would say that there are some quote green shoots. Soybean meal export market holding pretty strong, and that WASDE report basically showed limited to no change. Well, pardon me, there was an increase of about 20,000 metric tons of projected exports, and so that's been well, excuse me, let me rephrase that. Yeah, we did see an increase in projected exports for soybean oil, but for soybean meal, pardon me, we ended up, and I believe that number, yeah, that was unchanged. So we didn't see a drop off in soybean meal exports. Yep. That's correct. We did not, and we had a pace last week. That's what I was trying to say, Shelby. Sorry about that. A pace about we actually shipped about 350,000 metric tons. Need a pace of about 281,000 metric tons on the soybean side. So again, soybean meal side. So again, coming back to the same issue, that whereas prices in that complex generally just so again, 40 USA projecting for this marketing year a price of about $380 per unit per thousand short tons, and that being about 50 to 70 dollars per short ton less than had been than we had last couple of years, and now we've got pace and movement. So I know that we're there's a I guess if you were asking me to kind of summarize these last couple minutes of what we've got in the markets, I would say we're underway with field work. There's nothing in our way. We're not overwhelmed with moisture. We're getting the crop in. We have these impending issues that tied in with La Nina concerns and dry subsoils that we'll eventually have to deal with, but we're not dealing with them yet. The market has every right to trust that things will be normal. We'll get normal rains, won't have any problems, but it'll have to come. And so we'll see where that's at. We still have this impending question about South America we keep talking about, because we haven't seen that reconciliation yet. So we'll see where that comes. And so here, as we said in mid-April, I think that the time of real decision is basically from about May 15th until the end of June. You know, do we get a good start? Do we have moisture? And from there, if we do that, then you're at risk to what could happen in July, August, even early September in terms of the reproductive phases for corn and soybeans, sorghum elsewhere in the country. But all those times are ahead of us. Right now, we're just getting the crop in, and if there's anybody that's probably behind the 8 ball on this, it would be farmers that haven't sold their crops yet, have cash flow needs, and are wondering where and when higher sales prices might come. Increasingly, they're in a speculative cash storage approach right now in the markets, and there'll be a lot riding on what happens in the next basically 90 to 120 days in terms of old crop sales and new crop opportunities.
Dan, I appreciate you taking the time to join us once again and give us our grain market update.
Thank you, Shelby. I appreciate it.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but stick around because we have more for you ahead.